Welcome. My name is Thomas. I'm here to share in this video 1040 ES, which stands for Estimated Tax Payments. And I'm going to do an overview of this form. Not going to cover every last aspect of the form, but just give you some pertinent information that may apply to you and your situation going forward if you're dealing with a possible estimated tax payment situation. So if you haven't subscribed to my channel, please subscribe. If you like my content concerning my videos, my primary service I provide is consulting and coaching for women who look to start their own tax preparation business. I offer full service solution to take away all the guesswork to getting started, give you targeted training on helping you learn how to prepare taxes, professional software training, basic marketing training, and all the things you need to be able to operate your business on the front end as well as the back end. The back end, which includes if you have any employees or independent contractors that you'll be working with during your tax season or doing inside of your business is what the back end covers. So if you're not sure if this career industry is for you, then you definitely need to take action. And the most simplest action you can take is book a free 30-minute consultation call. In the description of my videos, I have a link that describes the booking call and how you can click on the link that'll take you to my booking page, and you can select the option for free 30-minute coaching for tax pros program and select the time and date that I have available on my calendar. And we get together and I can educate you and show you what the coaching program is all about, see you some real world training information that we use to teach our clients how to prepare individual income taxes, and then let you just make a decision based on real world knowledge and information if this is the right career move for you and business model. So the quicker you take action, the quicker you figure it out, the better. So we're going to dive into this video and this topic of 1040 estimated tax payments. So the first part talks about estimated tax payments is a method used to pay tax on income that isn't subject to withholdings. For example, earnings of self-employment, interest, dividends, rents, alimony, etc. Those type of incomes are not subjected to withholdings. Those are incomes that you must withhold voluntarily by paying taxes on that money at the end of the year. And then also, additionally, you can, if you receive an unemployment and you don't have taxes taken out of that, which is a bad thing based on your raw income, it may cause you to owe. You want to always have federal and state taxes taken out. Also, if you're receiving Social Security and you're also working the taxable part of that, you need to take some type of federal taxes out. So you rarely see some person have Social Security benefits and work who have voluntary federal taxes held. I've ran across a few people in my career of 21 years in this industry, 15 as a business owner, who had voluntary federal taxes taken out of their Social Security benefits. But those people were working, they had other income, and they knew that the more federal taxes they had taken out would lessen their chance of owing money during tax season. So that was a smart strategy move on that part. So when it comes to estimated tax payments, I'm going to give you the baseline on what's going to allow you to determine if you should be making them. And so those incomes I just mentioned, there's a few of them that may ask yourself, should I be making estimated tax payments? And then on top of that, the general rule is if you expect to owe at least $1,000 in taxes in 2022, after subtracting withholdings and refundable credits. Two, you expect your withholdings and refundable credits to be less than the smaller of 90% of the tax that was shown on your 2022 tax return, or 100% of the tax shown on your 21 tax return must cover all 12 months. Then you definitely want to be making some type of estimated tax payments. So generally, people who definitely want to make estimated tax payments will be self-employed people who generate significant income, who generally owe every year. So making estimated tax payments helps position you not to really owe too much money on the back end as it relates to your debt stacking up. So if you waited to every year to file your taxes and you owe $8,540. But when tax season comes, you don't have that money and you didn't make any estimated tax payments. Now you're going into a whole nother year with this debt constantly growing with penalty and interest added to it. And that type of behavior will just going to compound itself year after year after year if you're not making estimated tax payments, which is going to help reduce the taxes you owe on the money that you owe the government in the first place. So to help you figure out how much your estimated tax payments will be for the year, uh, this form and this publication will help you do that. But if you need additional assistance with that, I can help you do that for a flat fee, because this is what I do for a living. I help entrepreneurs and business owners figure out their estimated tax payments. My clients already get that included inside the services of consulting and coaching that I offer with my program, so it's included. But if you're not a client that's doing business with me on some level with one of my paid products or services, then you will have to make a flat rate payment, and I can walk you through that, give you the assistance and support you need to help you with your estimated tax payment situation over the years that you plan on filing estimated tax payments. And so when we scroll down, we look at this here little chart they give us. And so married, filing joint, or qualified widowers, 25,900. That's the standard deduction. Head of households, 19,400. Single and married filing separate, 12,950. So they show a little standard deduction chart that may apply to you based on your filing status. And so when it comes to this, I'm gonna scroll down, and this here information, this worksheet helps us. Self-employment tax deduction worksheet. So if you're self-employed, you'll be using this section, and from here we got the tax rate schedule, and this helps you to figure out your taxes based on certain situations. And then from here, estimated tax worksheet continues. And here, record of estimated tax payments. So these are the 4 times that you make payments. You make payments on the April, June, September, and January. You want to record those. And then these are your certificates. And so the 4th one, the 3rd one, the 2nd, and the 1st. Those are the certificates you will fill out and send off if you mail in a payment. Due to technology, a lot of times we pay electronically because number one, it's much quicker, more efficient, allows us to keep a better record, and allows us to not worry about our payment getting lost in the mail, which is another grueling situation to be in. So when it's all said and done, you want to make sure that you're making estimated tax payment, especially if you're the person that's owing $5, $6, $7, $8, $10,000 or more every year. But when tax season comes, you don't have a dime and you make the payments. This is the reason why you want to make estimated tax payments, so you can pay what you anticipate on in advance. And so April, June, September, and January are the 4 different times you'll make the payments, which help you when the end of tax season comes. If you made April's, June, and September, and then you make January, if you made those correctly and completely, like you should have, based on what you figure you're gonna owe for the upcoming tax season, one of 2 things may happen. Either A, you'll break even, B, you'll fall short, or C, you'll make an overpayment. And if you make an overpayment, you simply want to keep that money there and roll it over for the following year, which will have you a credit towards your taxes versus you trying to play catch up every year by making estimated tax payments and still maybe falling short based on your overall income that your business may produce, especially being a self-employed individual, or based on your overall income in general that has you on $1,000 or more each and every year. So if you need any assistance on that, definitely reach out to me. Use my booking link, and you can use the $99 discovery call option, or you can use the $167 consulting call option. That the second one will give you the ability to have me help you to fill out this form for you and have it ready for you each and every year for the next 3 years. So that's what's included for that. So when it's all said and done, if you're looking to start your own tax preparation business, and if you've taken action, if you've done your due diligence, if you've done your homework, if you reached out and talked to other people, and you just haven't found the person you feel confident in who can help you start and grow a profitable tax preparation service, then use my link to book a free consultation under the tax coaching pros option. And I'll see you in my next video.